What do we make of these numbers that Starbucks reported last night? Initially, the stock tumbled in after hours trading. Then it shot up to $97 at the open, then plunged again to $90 less than an hour later, before rebounding to finish the day effectively flat. They've given you the full roller coaster experience over the past 24 hours. Even though the headline numbers were weaker than expected, I found the overall results to be pretty encouraging. Keep in mind, Starbucks has been a long-term holding for my charitable trust. Not always a good holding, but for the past year, ever since they poached Brian Niccol from Chipotle to take over as CEO, stock's been doing much better. Brian orchestrated an incredible turnaround at Chipotle, and I think he can do the same at Starbucks. That's why the stock jumped almost 25% on the day he was hired. The stock kept climbing until this March, when everybody started worrying about tariffs and the fact that the turn might be more difficult than first thought, which is why the stock plunged to the high 70s in April, before ultimately rebounding to the low 90s as of today. Throughout this period, we've stuck with Starbucks because I believe Brian can deliver another turnaround here. He's got a plan to solve the throughput problem. This is a chain with too many customers, so they need to be able to process your orders more quickly with a goal of less than 4 minutes. He's also trying to improve the in-store experience, getting back to the Starbucks of old, the old third place between home and office. Along the way, though, the numbers, let's say they've been pretty choppy. When the company reported in late April, they posted a top and bottom line miss, with some of their worst numbers coming from the United States business, sparking fears that the turnaround could be further out than we thought. Now, look, I remain a believer. I told Investing Club members to be a big buyer, but things did feel pretty grim. Fast forward to last night, when Starbucks reported again. This time, the headline numbers were a bit disappointing, with global same-store sales down 2%. Wall Street was looking for a 1.3% decline. Even though their revenue came in higher than expected, their earnings seemed to come in soft, with Starbucks earning 50 cents per share. Wall Street was looking for 65 cents. However, much of that miss was actually from one-off items like a tax charge and an expensive leadership meeting. Well, expensive, but I think it paid off. Without those, the company would have earned 61 cents per share. Still a miss, but a much smaller one. When those numbers first crossed the wire right after the close, the stock plunged as people figured, oh, here we go, another weak quarter. But then it quickly bounced back as investors spent more time looking at the quarter. First off, people saw through the confusing earnings numbers, realizing that the miss wasn't as bad as they thought. Second, while Starbucks had weak global same-store sales, there were also some very encouraging signs in certain regions. North America, which had been a real problem area, came in better than expected, with the U.S. specifically in line with expectations, not missing the estimates as it did the previous quarter. China, previously the worst region for Starbucks, was also a relative bright spot, with same-store sales up 2%, driven by a 6% increase in transactions. The disappointment here came from the rest of the international business, which had flat comps. Geez, Wall Street was looking for 2.2% uptick. It had been a really good area. Again, not great, but management's been focused on turning around the domestic business first, and they seem to be making progress on that front. Even better, when the conference call got going last night, Niccol and his team gave us many more reasons to feel optimistic. Hey, he devoted a significant portion of his prepared remarks to the company's Green Apron Service operating model, which is basically their plan to improve the in-store experience here in America. Starbucks began testing this model in 1,500 stores 8 weeks ago. That's all, 8 weeks. But Niccol said that the partner feedback has been tremendous, with these 1,500 stores seeing improvements in transactions, sales, and customer service times. Given the success they've had so far, Niccol said that Starbucks plans to begin scaling up the Green Apron service across all of U.S. stores starting in mid-August. That is well ahead of their original schedule and very bullish, and why I think at the very beginning of the call he said they're ahead of schedule. Now, this morning when I spoke to Brian on Squawk on the Street, he gave us a more complete rundown on Green Apron. Listen to this.
We wanted to get back to winning the morning day part, and then we wanted to make sure we were staffed correctly throughout the balance of the day. So what you'll see with the Green Apron service model is we're reducing the number of hours where we have minimum staffing, and then we're making sure that we have the right number of partners in the right position at the right times. I think what you'll see is nice improvements in the morning day part, and then the balance of the day, what we've seen is we've also seen transaction gains there.
And that's what I found most encouraging about the Starbucks quarter. Management's plan for improving the core business here at home, they're already showing some really promising results, so much so that the company's accelerating that rollout of their new model. At the end of the day, nothing else matters for Starbucks if it can't turn the U.S. business around. Now they've gotten a proven way to make that happen. There was plenty of other positive news, too, like the solid performance in China, where Niccol said customers were responding to beverage innovation and new customization options, while Starbucks has been really ruthless about keeping prices low for non-coffee items. executives. He also gave a strategic update on whether they might sell that Chinese business, saying that Starbucks has, quote, received significant interest from more than 20 interested parties and we're evaluating options, end quote. Though he stressed that the company remains committed to keeping some of the China business, he wants to retain a meaningful stake in it. They do want to go down to the third and fourth tier cities. That's very important. Nickel also offered a walk around the globe, touching on some other key international markets, and the commentary was much more promising than the disappointing overall international same-store sales number. Again, I felt better. Putting it all together, I think it was a very positive quarter. Even if the stock was all over the map today, I didn't want to take my cue from the stock and see more. It seemed to have more to do with the Federal Reserve. Well, that's a little ridiculous. But don't worry about these short-term swings, which were kind of a microcosm of the stock's whole first year under Nickel's leadership. Focus on what matters, the long-term turnaround plan, which is going well ahead of schedule. The bottom line, if Brian Nickel keeps delivering on the turnaround front, I bet Starbucks and its shareholders will be huge winners. That's still my expectation here, and I feel even better about it tonight than I did last night before the company reported. Let's take some calls. Let's go to Andre in Louisiana. Andre.
Hey, Jim. How are you?
I am very good, Andre. How about you?
I'm a big fan of Costco, and so I am befuddled just as you are about the price action.
Well, you know what? I am glad you called me on Costco. I was actually kind of mulling over this one with Jeff Marks, my colleague on the club, and I have to tell you, I am sick and tired of the stock going down. People feel 51 times earnings is too expensive. I think that's wrong. I think they're doing everything right. Every check indicates to me that it's time to start buying some if you don't have any. And if you have some, perhaps you should buy some more. Brandon in Texas. Brandon.
Howdy, Coach Cramer.
Hey, man. How you been?
Been all right.
Good. And what's happening?
Hey, has your stance shifted at all on GIS, General Mills?
Yeah, I've gone from here to here, meaning no, not much stance changed at all. Here's the problem. This is one of those companies that, frankly, is part of what I talk about as being in the heart of the inflation complex. They've got food that costs too much. They have input costs that cost too much. And they're going to have to sacrifice their profit margin and bring their food price down, or else they're not going to do the business that they used to do. And no one wants to cut their margins. They're afraid about what will happen in the stock market. But all that's going to happen is the stock's going to go down anyway. All right, if Starbucks keeps delivering on the turnaround Nickel promised today, I think this stock could get a double shot of a boost. Now, there's much more mad money ahead, including my exclusive with data center player Vertiv. Could Wall Street be underestimating the power of the AI build-out, especially after the earnings we saw tonight? I'm getting the latest from the CEO. Then the consumer's still feeling this pinch from high prices. So what is it really going to take for companies to ease up at the register, like I just mentioned with General Mills? I'm going to give you my take. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.